Good morning, good afternoon, good evening. Let's take a look at the trade of the month for February 2020. And this is a great pair that we included in our November vintage of our top 30 US equities pairs for PairTrade Finder. If you guys want a little bit of just a quick reminder of what those are, you can always go to pairtradefinder.com/autoload, and this will give you the details of how we select these top 30 US equities pairs. We take a couple of weeks work and we go through over 1,800 symbols, and we run back tests and fundamental correlation tests of all of those 1,800 symbols, which are pre-screened for daily volume, daily liquidity, and market cap. So they're over 2 billion market cap and over $2 million a day of daily liquidity. Okay, so without further ado, let's get back to the trade of the month. And the companies we're looking at are W.R. Grace and OLIN Corporation. I'm not going to go through the fundamentals for the sake of brevity, because we have already pre-screened these. Suffice it to say that they're both traded on NYSE, and about 1.9 billion market cap for W.R. Grace, 1.7 billion for OLIN. They have a betas. One is at 1, one's at 1.37, and they are both in the basic materials sector, specialty chemicals industry. And one has 4,000 employees, the other has 6,500. They're both in the United States. Very similar companies doing specialty chemicals to some overlapping industries and some different industries. They do different chemicals, but they trade very closely. And why did we choose them besides that fundamental correlation? Well, let's go back to the back test. And this is a 3-year back test. There were 8 trades. Look at the equity curve, bottom left to top right. We had 100% winners, totally co-integrated, 0.99 on co-integration, 63% correlation, which is great. If you'd allocated your capital just to this pair over the last 3 years, you would have done 17.7% compound annual growth rate on an unlevered basis. The maximum drawdown was 5%. You can see here the blue line is gross profit, the green line is after broker commissions. We assume 10 basis points each way for each leg. And what we like best about this is the 100% winning trades at a 786 average net profit per trade. And the average trade lasted about 20 days. You can see the ratio chart in the bottom right here. Nice and flat for about the first year and a half, and it's been nice and flat for about the last 4 months. It did trend between about a year and a half ago and a year ago, though we still got some great trades in that because the trend wasn't too steep, and you can see there's lots of zero crossings even while it was trending. So that's why we chose it. We always take a quick look at the relative performance graphs for the last year, and here you can see the co-integration at work for these two equities, GRA, OLN, and you can see every time the relative performance diverges, it reconverges, diverges, reconverges. And this is the big divergence here is the signal we're going to look at now, and the reconvergence here was the exit. So let's go to the pair charts. Let's look at this signal, or you can see it in your trading signals. It happened on here, the 24th of February, was to buy long W.R. Grace, sell short OLIN Corporation, and that happened at negative 2.84 standard deviations. In the November vintage of the PTF top 30 US equities pairs, the entry stretch was 2.5 standard deviations, and the exit stretch was 0.8 standard deviations. Okay, so that was the signal, and when you got it, the first thing you would do would be to check news. And if we go to the website of W.R. Grace, you see that on February 24th, the only news that had been proximate was February 18th, a generic news release saying they're going to participate in a chemicals conference for UBS in San Francisco. That's not a market affecting piece of news, so there was nothing around February 24th that would have caused this signal from the point of view of Grace. We would then quickly check on OLIN Corp, and what we see here is February 24th there was a press release. Okay. There was nothing before then. The earliest one before then was Feb 4th, which was an earnings release. And what they say is that Sachem Head Capital Management has submitted a notice of intent to nominate 4 candidates for the election to the OLIN Board of Directors. Now, you read the rest of the press release, it seems like they're pretty open to this. It doesn't seem like it's a aggressive move. It also doesn't seem like it's an activist move, which could possibly cause the stock to pop, based on expectations that an activist board would serve shareholders' interests to release shareholder value through any type of corporate actions. What we can do here, you would have to make your own determination. Our determination would be that that doesn't look like it's a fundamental value affecting event. But what you could do is go to the pair charts, now that we have 20/20 hindsight, and just look on OLIN Corporation on that day of that announcement. Okay, the stock dropped by $1, but the WR Grace dropped by $3, relatively about the same percentage on the next day. So it looks to us like that is not a fundamental value affecting announcement. You would have to take a closer look and make your own determination. But we looked and we said it wasn't. Okay, so then we have to look at dividend dates and earnings releases. On these ones, it's pretty straightforward. The shares went ex-dividend, one on Feb 6, so that's clear, and there won't be any dividends in the 20 days of the average trade length. And on WR Grace, the share actually went ex-dividend on Feb 25th, not Feb 23rd. If you check the press release, this is wrong in Yahoo, which means there was probably a drop the next day, but it wouldn't have caused a signal on the close on the 24th. And even if you look at it, it was about 30 cents, because the dividend is $1.20 a year, so it's about 30 cents a quarter. And again, if you go to your pair charts, you can see that when it went ex-dividend on the 25th, even if it had moved by 30 cents, that's almost nothing compared to the overall market movement at that time. The other thing to look at in terms of overall market movement, this signal happened here. So you had a share in a gentle downtrend compared to OLIN, which was also a share in a gentle downtrend, but on those days was looking pretty strong. And that's the divergence between the relative performances that caused the signal. But they're both in a gentle downtrend, so that prima facie would say, hey, it's probably not a bad chart setup to look at. So then we would go to the technicals of the pair charts, and we're looking for the last year. You could look back a year, you could look back 2 years or 3 years. To make things a bit clearer, we've set it at 1 year. And what we can see is on the ratio chart, you had a strong move below, and that was almost 3. It was 2.84 standard deviations, which triggered. And if you see the last 4 trades, they've been on the other side of the ratio line, but they're all around 3. And this one is also around 3, so that's not out of the ordinary. We also look at it from a percent from mean basis, and all of these 4 trades were somewhere between 10% and 14% away from the mean when they triggered. This one is at negative 13-14%, so again, pretty similar on the other side. So that would say that it's well extended, but not out of the regular frame of reference for the last year on this pair. And again, you could look back further, but for the sake of brevity, I won't. We then look at the RSI chart to see whether we can see, is it an extreme? It's at an extreme, so that would suggest that it may be ripe for a bounce back. However, indicators can stay at an extreme for a long time. What we really like to see is divergence. When I review from here to there on the RSI chart versus the ratio chart, I'm not seeing any divergence, okay? So that was one lower low, and that's the next lower low. Those are reflected here and here. I don't see divergence. And therefore, if you look for divergence in your trading plan to be present before taking a trade, you would maybe reject this trade. If you balance that off with a number of other factors, you may still keep the trade. And another thing we look at before we jump in is we go back to the watch list. We look at the volatility. The volatility on this pair is 1.99% over the last 100 days of look back. And that's pretty typical for a pair, so we wouldn't position size up or down versus our standard position size. We would leave it at 10,000 a leg, or if you're trading 2,000 a leg, at 2,000 a leg. We see it as a normal volatility pair. Okay, so that's a quick review, and then what actually happened. Well, if we go back to the pair charts, we can see that we were in the trade for 1, 2, 3, 4, 5, 6, 7 market days. The trade went in the money immediately and stayed in the money the whole time, which is really nice. We love trades like that. Makes you want to pair trade all the time. And we did 7 market days, and we made 1,150 on 10,000 a leg. So that's 11.5% on nominal. And if you're trading at 4-to-1 leverage using CFDs, you would have put up $4,000 of equity and made $1,150 in 7 days on that equity, for a return of about 28% in those 7 days. So great trade. We love this pair. It's actually in trade again. The previous trade to this one also made over $1,000 in 5 days. So that is one of the top 30 U.S. equities pairs from the November vintage. We have a new vintage coming out shortly, and which is done on shorter look backs and more aggressive entry and exit stretches. We'll have more on that later. Happy trading, everyone.